Hi everyone, so today we are going to be covering Cardinal Health. It's me, a stock analysis video. Dom is going to go ahead again and read off the company analysis, how the company makes money. So Dom, whenever you're ready.
Alrighty, I am sharing my screen. Let me know if you can see it.
Okay. Yes, perfect.
Cool. Yeah, so today we're talking about Cardinal Health Incorporated, which is a American healthcare service and products company. So basically, they do deal with distribution of pharmaceuticals and medical products. A lot of their main customers are hospitals, medical professionals, um, doctors, things like that. Um, so basically, you think of anything that need to get sent to them, medical wise. Some of the products they talk about are, gloves, surgical apparel, fluid management systems. So a lot of their revenue comes from the actual materials, transportation. They also have partnered with a few companies. So they mention in here about CVS, Caremark, another one named Red Oak Sourcing, which makes essentially generic drugs. And so by having these other partnerships, that kind of helps to secure different revenues for them, not just for distribution of typical medical devices and gloves and things, but also generic drugs, things like that, where they can kind of get revenue from different sources. And so that's kind of like their main stick is a lot of just distribution, manufacturing of anything medical related to most major health players in the United States. So I'll let Matt take over and kind of talk about the financials of the company.
Okay. All right. Thank you, Dom. Good, great analysis.
Thank you.
All right.
Uh, there you go.
All right. So I'm going to go ahead and go to the most recent earnings report as usual, just to see how the company is actually performing. And their most recent earnings report was fourth quarter of 2025, so they're a little bit ahead technically of the scheduling, but that came out August 12th. And they did well EPS. They came in at $2.08, which beat the analyst estimate of $2.03. The revenue actually was a little bit lackluster. It came in slightly below analyst expectations, so it came at 60.16 billion. And their first quarter 2026 will come out on October 30th. However, you have something here, and I wanted to see the revenue growth. Cardinal revenue experienced a decline in fiscal year 2025 following several years of strong double-digit growth. After posting double-digit annual revenue growth in 2022, 2023, 2024, the annual revenue growth actually declined 1.87% in 2025. This is because of major customer contracts, expiration of major customer contracts, which negatively impacted the pharmaceutical and specialty solutions segment. And that obviously affected the bottom line for this company. So the next thing we're going to see here is the free cash flow, and it's okay. 2022, 2.7 billion, now 1.8 billion. It really hasn't been growing, I would say, that much. Uh, it's lost value, if anything. If we see the future growth, which I'm going to pull out right now, the future growth of the company is very mediocre too. 1.8 billion, like I said, now, and in 3 years, 3.9 billion. So that's a double. It is a double, however you look at it, and that's good. A little bit more than a double, and that's good. But then you have something interesting here, which we just covered in Wingstop, which is they have negative shareholders' equity again. And that's because I looked it up. It's because they have taken out a lot of cheap loans for share repurchase programs and dividends, which they do have a dividend. It's like 1.7% annually. So that's why they have this. They have a lot of debt on, and you have to be a little bit wary of these types of companies, so people know. Now, if we check my DCF on it, my DCF is actually going to say it's 42% undervalued. If we check, that was Wall Street forecast or historical growth. If we check Wall Street forecast, it's going to be 40% undervalued. So really, however you look at it, it is going to be pretty undervalued. And maybe I think it's a good trade, but not a good long-term 5-year investment, I would say, just based on the numbers. Now, we're going to have to bear with me. We're going to have to do Tipranks, and we're going to have to quickly look at it. It's a strong buy. It's 8, I believe it says, yeah, 8 holds, 8 buys, 2 holds. I'm going to reload it again. And it looks like there's, what is that, 30% upside? Yeah, something like that. So you have decent upside on the stock. maybe like 28, 30%. It's okay, but you have to be a little bit cautious of the negative shareholders' equity, and that's pretty much I would be the most worried about. Dom, is there anything you wanted to add?
No, I think you hit it pretty well. I don't know anything else that can add to the conversation.
Okay. All right. Thank you, everyone. Thank you, Dom. Appreciate it.
But thank you.